Hi guys, it's Still Inspector here. Welcome back to the Mining Show. Today we've got some news to cover and we want to go over the block times of Ethereum. So I think it was yesterday or the day before we seen a block time of 15.55 seconds and now we're up to a block time of 16.02 seconds. Just a quick update on the block chart, so obviously the Ethereum bomb, it's gone off at around May and it's just slowly going up. Obviously in about 2 weeks it will go down, just because the team is defusing the bomb. So the next story that we have is that crypto miners are selling their GPUs for cheaper. Obviously we went over this and there was a bunch of people in China that were selling them off. They were even having live streams that were selling these GPUs because basically they want to make money back. The cryptocurrency market continues to decline, which has resulted in a large number of miners exiting the market or reducing their operations, thus finding themselves in possession of valuable computer components that no longer need. Some of these miners, many from China and South Asia, are now taking these devices and dumping them on e-commerce sites. As a result, GPUs that typically range from $500 to $600 are sold out at half this price in the second-hand market. As noted before, computer game GPUs are suddenly flooding the market, a trend likely driven by several factors. The main reason is how cryptocurrency prices were down since this winter. Now it looks like the market, a transformation won't happen anytime soon. Miners will jump from the ship. These are not the original GeForce RTX 3060 hardware they sell. These graphics cards are used to mine cryptocurrency, which uses a ton of electricity. Buyers found that the RTX 3060s to be cheap for a reason. Many of them are defective after prolonged use. When you are mining on GPUs, obviously you will have wear and tear on them, but it's not to the extent that people really think. These GPUs are made and rated to run constantly for a period of even 3-5 years. As we've seen with the older cards that people are still using, the 10 series and the 16 series cards, both of them still mine today, and they have been used, other miners might have sold them to other miners and they're still being used. So theoretically you can use them for gaming if you want to pick one up. The only thing that I would say is that if they have artifacts on the screen, which is where it pixelates, that's when you don't want to be buying them. So if anybody says that they've got a GPU that has artifacts in it, you don't want to buy that. But pretty much most mining GPUs, if they have been running for about 2 years, will probably still be good for gaming. There's not much actual drop off after 2 years of mining. If you really want to get a gaming GPU, the prices are low right now, so I'd go ahead and buy one. However, there has been some disagreement in the tech community about how degraded these graphics cards really are. As I just said, it claims that buying a used graphics card from an experienced miner is more than buying one from a gamer. Tech YouTuber Linus Sebastian tested some GPUs for camera mining, and I found out that the graphics cards used still worked fine if they were carefully maintained by their previous owner. So obviously if you have a load of rigs, you do take care of your GPUs, cleaning them, making sure that the power supplies are right, making sure that you're not overclocking it too much and throttling the GPU. Just stuff like that. As I said, they're rated to run for 3 years non-stop, so you can theoretically buy a GPU from the second-hand market and they will still be fine. It is disturbing that Nvidia has benefited greatly from crypto boom, to the point that the company has in fact acquired with a federal fine to try to hide crypto boosted its earnings. So obviously cryptocurrency, Nvidia is the big manufacturer of the GPUs. Typically coins are coded on their mining algorithms to favor Nvidia GPUs over AMD GPUs. This is probably because Nvidia, their product is better than the AMD cards when it comes to mining. But there are coins like Fero or Ethos that can be mined using an AMD, and they're way more efficient on those type of coins. Now the second article is despite the downside, Vitalik, obviously the Ethereum co-founder, is optimistic about the Ethereum blockchain. The confidence of the Ethereum CEO is still intact about the Ethereum blockchain. It will continue to become more mature and successful blockchain ecosystem. It just says here, despite all the downsides, Vitalik, Ethereum co-founder, is still optimistic. Ethereum's trading presently at $1,149, and is a 76% down from its all-time high of the last summer. Last week Ethereum dropped below $1,000 per coin, and on Saturday fell to around 897. Now I did see this coming. I said in a video on, I think it was Thursday of last week, that we would definitely see around a $900 coin, and about 2 days later it actually dropped to 897 per coin. So if you had your stop losses or something like that set to buy at 900, then you would have picked Ethereum up for a cheap price. The good side of crypto is more than the bad side. Vitalik Buterin previously said in early June that the system cannot be built without the happening of negative cases. Drawing a case study from the recent crash of Luna, he added that the healthy moment in crypto is an indication that the downsides are real. Referring to the general crash in the crypto firm, situations like this have silver linings. Vitalik Buterin said, adding that, at least in my experience, what always happens is that morally clarifying moment where you can see how different people respond, and you can get a much better view of what their character is and what kind of people that they are to you during the good times. He also goes on to say, I think that the loudest applications of crypto are in reality far from the most common ones. People are trading 300 million in monkeys, which are NFTs. Things are getting hacked for over 20 million once in a while, and all that stuff is real. But the more common stuff that I think crypto does is not that. It's stuff like random people around the world who are finding it easier just to move money internationally and have businesses that collaborate across borders and store their savings and so forth. People who do them quietly, but it's also very real. Besides the comments of the Ethereum CEO, some of the other persons in the space have said something similar to him. Mark Cuban, which is a billionaire investor, he owns a sports company in America. Distributive applications and technology released during a bear market, whether stocks or crypto or any business, will always find a market and succeed. In stocks and crypto, you see many companies that were sustained by cheap, easy money, but didn't have valid business prospects. And these disappeared. And then he goes on to say, Warren Buffett said, when the tide goes out, you get to see what's swimming naked, basically. So yeah, this basically whole article is saying that when we see this crypto boom and this crypto dump, we get to weed out, stuff like Terra Luna, which was never going to work. And all these stuff that's not going to work, all this like really bad altcoin scams, all these networks that aren't actually made to be what they're supposed to be. They get weeded out, and then after the bear market, we're left with the good products. Now next up we have Bitcoin mining economics, past, present and future. I'm not going to go over the past or the present, I just want to look into the future. So it says here, does this go on forever, the future of Bitcoin mining? Above I've illustrated the status quo of Bitcoin chain switching, but in this practice is a product of the fiat obsession and lack of understanding about Bitcoin's economics or its real value. It isn't to be measured in fiat. Obviously he's talking about the fact that on all these exchanges and all these news articles, they're comparing the price of Bitcoin to the price of a US dollar. Now if Bitcoin wants to be a currency, it's going to have to start to be compared to itself in a way, like gold is compared to something. Back in America they had the gold standard introduced, where they basically took the gold that was in their reserves and any money that was created was equal to the amount in the reserves. It's protected against like this thing that they call in Bitcoin, which is double spend. So they can't have more money than there is in the gold reserve. And then in the 70s or I think 60s, they got rid of that and they just started printing dollars no matter what the gold reserves were. So he's saying here that because these coins are all measured in US dollar, like they say Ethereum to USD, or they'll say Bitcoin to USD. This person is saying that, we need to start measuring stuff in a crypto to something else. So let's say that Bitcoin is the gold standard, which obviously it is because it's the most on the market. Everything needs to be linked back to Bitcoin. Anyway, let's go on. The Bitcoin subsidy is a ticking time bomb that demands to be replaced. On average, blocks are nowhere near replacing the subsidy. measuring in Satoshis. In Bitcoin, it's impossible because of the block size limit, and the BSV is still uncommon, although there have been few examples where fees have outperformed the current subsidy. But this is pretty low target to hit. In reality, Satoshi Nakamoto gave us a system where at least 50 Bitcoins could be mined in every block, and instead of thinking of ways to make that permanently reality, the average miner and used to seem happy to live on the reduced subsidy value of around 6.25 blocks. This is woeful, and Bitcoin is punishing us for our lack of adopted strategy. Bitcoin is capped with how many transactions it can contain inside a 1 to 4 megabyte theoretical limit. And so the large transaction count per block occurred in 2015 with a 999 kilobyte block that contained just over 12,000 transactions. Comparatively, BSV has no cap, no limit, and no fear of running into a quote at which no profit can be sought. So this BSV, I think, is just like a cryptocurrency or something like that is linked to Bitcoin. And then it goes on to how and where to mine. The irresponsibility of existing markets has come to home to roost with lending and derivative platforms ceasing withdrawals, cross-exchange bailouts, and monitoring number of signs that we may be experiencing the open stages of a crypto bank run, as everyone is forced to deleverage and re-hypothecate the real assets versus the liabilities on their balance sheets, and the market has contracted in what might be the opening stages of a complete collapse. So what they're talking about here is that the crypto bank run is kind of like the bank run that happened in 2008, where they were just having derivatives of derivatives, and people were betting against those derivatives or betting on them, and then just this kind of back and forth betting on the same thing. So when it goes, like when you're betting on a debt, let's say for a big housing company or a mortgage company, people will bet on top of that, and then when that mortgage company goes broke or just goes into debt, it basically comes crashing down. And the more people that are on top of the pyramid, I guess, it all comes crashing down. So this is what this person is saying will happen with crypto. Basically everything is like kind of modeled off Bitcoin in terms of Bitcoin was like one of the first cryptocurrencies. So people have been saying that if Bitcoin fails, everything else is failing. So this last thing I want to go over is just a Reddit on Ergo miners. It says, what's the incentive to mine Ergo? Hopefully someone can clear this up for me. I've been running Ergo for a little while, but switched back to Ethereum today after the Ergo rewards were cut by 20%. There's a further reduction of 3 Ergo planned every 3 months. What is the long-term incentive to mine Ergo? If there are no gas fees that pass along to miners, it just seems that the return is going to constantly dwindle. I just want to go over this one comment and then we'll finish up the video. It says here, from a technology perspective, Ergo is a very advanced and only in its infant stages of adoption. While the EIP 27 re-emission contract reduces block rewards in the short term, it does provide an extended runway for securing the chain along the storage rent. I like how the get block is using the native functionality of Ergo smart contracts to provide miners with transparent earning fees on-chain and subpools, which are mutually beneficial for both the project's fair initial token distribution and the miners' profits. So Ergo is new in the space, obviously, and we've seen a lot of people switch to it because it became slightly more profitable than Ethereum about a week ago. So I just want to say that, you know, Ergo's only in the early stages, and Ethereum has been around for a while. So you just got to give these cryptos time to kind of begin to get their legs in the space. Things such as Flux, you know, it's only been around for a year, and we're going to see that in the next 5 years, Flux is going to be building a massive, massive crypto ecosystem. So make sure that you're doing your research on these small coins that are coming into the space, because these are the coins of the future. You know, these are the coins that provide use cases and provide very advanced technology that just hasn't been picked up yet. If you guys did enjoy the video, please like and subscribe to the channel, and I'll leave links for all the articles in the description below.